Welcome back to Dinar Community Channel. The global financial stage has been shaken by events few thought they would ever see in their lifetime. The Iraqi dinar, a currency long dismissed as little more than speculative paper by mainstream economists, has undergone a dramatic revaluation. What began as rumors whispered across investment chat rooms and tight-knit circles of currency holders has exploded into a reality that is impossible to ignore. Banks across the world are experiencing surges of customers demanding appointments, exchange centers are overwhelmed, and financial markets are stunned at the domino effect this one move has triggered. The Iraqi Dinar Revaluation, or RV as it has come to be known in the community that waited years for it, has cascaded across the global economic system like a row of toppling dominoes, each fall striking another until the entire financial picture looks fundamentally altered. At first, the revaluation appeared to be a technical adjustment within Iraq itself, a response to years of careful preparation, budgetary reforms, and international negotiations. Iraq, blessed with some of the world's richest oil reserves, had long sought to bring its currency in line with its real value on the world stage. After decades of war, sanctions, corruption, and instability, its monetary system was weak, its dinar trading at levels that reflected fear and distrust rather than true economic potential. Behind the scenes, however, Iraq had been steadily building reserves, modernizing its financial infrastructure, and meeting benchmarks set by international institutions like the IMF and World Bank. The announcement of a revaluation was not a spontaneous act, but the culmination of years of quiet groundwork. Still, when the change was officially confirmed, the shockwaves traveled faster than anyone could contain. Holders of dinar, ordinary people, veterans, expatriates, business investors, and even skeptics who bought small amounts, just in case, rushed to banks and exchange centers to cash in. Lines formed overnight, and in many major cities the rush was so intense that banks had to extend hours, bring in extra staff, and even limit how many people could be seen in a day. Security became a concern as well, with armored trucks visibly moving in and out of bank branches, underscoring the reality that billions of dollars worth of currency were being exchanged within hours. The domino effect was immediate. As banks became flooded with dinar holders, liquidity shifted at record speed. Banks had to reconcile the massive outflow of newly exchanged funds, central banks scrambled to balance reserves, and regulators hurried to issue clarifications. On the markets, currencies linked to regional trade saw sudden fluctuations. The Vietnamese dong, long speculated as another undervalued currency, saw a surge of interest, with traders buying up large positions in anticipation of a similar revaluation. Other currencies tied to emerging markets felt the ripple as well, with sudden swings that traders had difficulty pricing. Financial markets were not the only ones caught off guard. Governments, too, had to react quickly. The U.S. Treasury, European Central Bank, and financial ministries across Asia issued statements within hours, acknowledging the revaluation and affirming that it was being recognized officially within global systems. They urged calm, but calm was not the prevailing mood. News channels ran live coverage of banks with lines stretching out the doors. Social media was flooded with pictures of people holding bundles of dinar, screenshots of exchange confirmations, and emotional stories of lives changed in an instant. For many holders, the revaluation was not just about money. It was vindication after years of waiting, of enduring skepticism and ridicule. Families that had quietly held onto dinar notes for more than a decade suddenly found themselves with life-changing wealth. Retirees spoke of finally being able to pay off debts, send grandchildren to college, or buy homes they once thought were out of reach. Veterans who had served in Iraq described a sense of poetic justice. What had once been seen as worthless paper picked up during deployments was now a ticket to financial security. Communities of dinar holders that had supported one another online for years shared emotional messages, describing tears of joy and disbelief. The sheer scale of the event, however, presented logistical challenges of historic proportions. Banks had to coordinate not just the mechanics of exchanging currency, but also compliance with anti-money laundering regulations, customer identity verification, and tax reporting obligations. Financial advisors found themselves inundated with new clients seeking urgent guidance on how to handle sudden wealth. Law firms specializing in estate planning received floods of calls, with many individuals realizing they needed wills, trusts, and asset protection strategies they had never previously considered. Markets, meanwhile, remained in a state of volatility. Stock exchanges saw sectors tied to financial services soar, as banks profited from fees and spreads on the exchanges. Luxury goods companies saw their shares rise, anticipating a wave of spending from newly enriched consumers. Conversely, some industries tied to low-income services saw declines, with analysts predicting that many who had lived paycheck to paycheck would no longer be dependent on them. The real estate market, already heated in many parts of the world, braced for an influx of buyers armed with fresh liquidity. Economists quickly began to debate the long-term consequences. Some argued that the revaluation, though historic, was a contained event that would ultimately settle once the bulk of dinar was exchanged. Others warned of systemic risk, noting that the sudden transfer of wealth on such a massive scale could distort investment flows, destabilize certain markets, and even create inflationary pressures in sectors like housing and luxury goods. The IMF issued a cautious statement emphasizing the need for coordinated oversight, while also acknowledging that Iraq's move reflected real economic progress and legitimacy. For Iraq itself, the revaluation was both an opportunity and a challenge. On the one hand, it symbolized the country's re-entry into the global economy as a serious player, no longer burdened by the shadows of its past. On the other hand, it created expectations both domestically and internationally. Citizens expected a higher standard of living, foreign investors looked to Iraq as a lucrative destination, and political leaders faced pressure to ensure that oil wealth was managed responsibly. The Iraqi government promised transparency and long-term development, pledging to reinvest in infrastructure, healthcare, and education. But the global domino effect did not stop there. As stories of instant millionaires spread, interest in other undervalued currencies skyrocketed. Currency dealers reported record sales of Vietnamese dong, Indonesian rupiah, and even Zimbabwean dollars, as speculators sought to replicate the windfall. Financial watchdogs issued warnings about scams and fraud, reminding people that not every currency would follow Iraq's path. Yet the appetite for risk seemed insatiable, fueled by the tangible proof that one long-dismissed investment had paid off spectacularly. The human side of the story remained perhaps the most striking. Families reunited to celebrate newfound wealth, churches and community groups saw massive donations, and charities began receiving unexpected gifts. Stories emerged of individuals paying off entire towns, medical debts, funding scholarships, or anonymously gifting homes to those in need. At the same time, darker tales surfaced as well. Not everyone was prepared for sudden wealth, and financial predators quickly circled. Reports of scams targeting dinar holders rose sharply, from fraudulent investment schemes to fake tax collection calls. Authorities warned the public to be cautious, emphasizing that sudden riches came with responsibilities as well as opportunities. Banks, overwhelmed at first, began implementing structured systems to handle the influx. Appointment-only exchanges became standard, with dedicated floors or facilities set up to manage dinar holders separately from regular customers. High-net-worth divisions within banks suddenly found themselves serving ordinary people who, overnight, met the thresholds for private banking services. Financial literacy programs gained traction, with institutions offering workshops and online courses to help new millionaires make wise decisions. The international press framed the event as a once-in-a-generation financial phenomenon. Comparisons were drawn to historical currency realignments, though none had ever occurred in such a way, directly benefiting millions of ordinary citizens rather than just governments and corporations. Analysts described it as a democratization of financial windfalls, a redistribution of wealth that bypassed traditional channels. Yet they also warned that history showed sudden wealth often led to mixed outcomes. Some managed it wisely, while others squandered it quickly. In the weeks following the RV, global markets remained jittery but began to adapt. Liquidity flows stabilized, though certain sectors continued to see abnormal activity. The real estate market, particularly in suburban and vacation destinations, experienced bidding wars fueled by cash buyers. Luxury car dealerships reported record sales. At the same time, investment firms noted a rise in conservative portfolios, as many dinar holders chose to preserve their gains rather than chase further risks. The domino effect also extended into politics. Lawmakers in several countries introduced emergency measures to address the influx of wealth, including temporary taxes on certain transactions and new reporting requirements. Political debates flared about fairness, with some arguing that the RV represented an unjust windfall for a select group, while others countered that it was a legitimate reward for those who had taken the risk and held faith in Iraq's recovery. Public opinion was divided, but the reality of the financial transformation was undeniable. As the months progressed, Iraq's role in the global economy became more defined. International corporations announced new projects in Baghdad, Basra, and Erbil, attracted by the strengthened currency and growing stability. Oil contracts were renegotiated on more favorable terms, and Iraq's sovereign wealth fund expanded rapidly. The country became a focal point for discussions on emerging markets, with analysts predicting it could follow the trajectory of nations like the UAE or Qatar if reforms continued. Yet perhaps the most lasting legacy of the Dinar RV was not in numbers or markets but in psychology. It shattered the notion that certain financial outcomes were impossible. For decades, the idea of a currency revaluation that could transform ordinary citizens into millionaires had been ridiculed, dismissed as a conspiracy or a scam. The RV turned that narrative upside down. Suddenly, what had been laughed at became fact. And once the impossible happens, people begin to believe in new possibilities. The Dinar RV domino effect, with banks overflowing and markets stunned, will likely be studied for years by economists, sociologists, and historians. It was more than a financial event, it was a social and cultural phenomenon. It demonstrated the interconnectedness of global systems, the unpredictability of human belief, and the extraordinary impact of a single nation's decision on the lives of millions around the world. Whether it ultimately leads to long-term stability and prosperity, or becomes a cautionary tale of sudden wealth, remains to be seen. But one thing is certain. The world will never forget the moment when the dinar revaluation turned speculation into reality and set off a chain reaction that no one could stop. Like and subscribe for more videos.